All right, we are live. We are doing this, team, on a Monday, shortly after markets closing, because there's a lot going on. I've got a small window of time, so I want to get this information out. There's a whole bunch of stuff going on. If you are paying attention to the bond market and stuff like that, so interesting. I mean, I can't tell you how bond bullish you have to be based on the formations of these charts, and it just leads me to believe the bond market is so much bigger than the stock market. The big money is really in bonds. Leads me to believe they think something bad's happening with the stock market around the corner. Now, I have a couple of things I'm going to show you. I have some opinions. I did start kind of a little bit of a shitstorm on Facebook. If you're friends with me on Facebook, Derrick Evans here, VA Home Loan Specialist, NMLS 155010. Get that out of here. Let's take a look at some of this stuff. So, listen, all I said was, hey, stock up on toilet paper sooner rather than later. Why? There's a lot of people on the inside in Washington, D.C. who are saying that a second round of lockdowns is coming based on the Delta variant with COVID. Do we know that for sure? No, we don't. But I do think that this is something that's a real possibility, and you can order toilet paper on Amazon right now and have it delivered like next day. So, hey, why not? You know, if you're alive, you're going to use the toilet paper. So one of those things it's okay to stock up on. But I was kind of joking about it, and man, did it get serious quickly. Here's what I want to show you. This, our boy Jimmy Kramer, he said here, most of the companies I deal with, when he says I deal with, he means that he interacts with. So he talks to a lot of CEOs. He interacts with a lot of CEOs, companies that he owns for his charitable trust. He knows the CEOs personally. So when he says I deal with, that's what he's talking about. He said they are still in denial that this Delta strain is going to shut things down. So what that tells us is that if they are in denial, then, you know, the market has not priced in a potential second shutdown. And if you just look at where everything is, the Dow's still close to 35,000, S&P almost 4,400, NASDAQ flirting with 15,000, you're hearing 14,700. It looks like that. It looks like there is no price in for a potential second shutdown. And when he's saying this meaning that if you fall, you have to read his other tweets. He believes that it's possible. Let's see, what was this one? Okay, that's BlackRock. We're going to get to that in a second. So I believe that this is very possible, and this is what the bond market is showing us. Now, let's take a look here, because boy, what an interesting time for home loans and interest rates. If we zoom out a little bit here, I mean, this is the bond chart for mortgage bonds. We're going to go back to January when we hit those all-time lows, which were all-time highs for bonds, because remember, bond prices being higher is good. That means rates are lower. So we want to see bond prices go up ultimately. Now, since January, they've gone down, but you can see we were in much worse shape before. Back down here and all this. Now we're up here. This is where we finished the day today. And oh my goodness, what did I tell you? I had a feeling. And see, the technicals did not agree with me. And that's the reason why I've been so cautious in my recommendations lately, because the technicals here, this blue line is the 200-day moving average. We knocked on the door twice, 3 times, and we busted through on the 4th time. That was on Friday. I couldn't make a video on Friday. Just did not have time. So, you know, on the 4th knock, we made it through. And I had a feeling we would. But the technicals were saying, hey, you're up against the 200-day lock, right? So we were locking purchases. Obviously, you can always float down a purchase if rates improve, which is nice. Refinances, I was saying, hey, if you feel like gambling, hold off. And that gamble may have paid off for a lot of people now. So, you know, we'll see what happens. But we did close not only above the 200 on Friday, but then these 2 intermediate resistance levels both got cleared today. We closed above everything. So where is their resistance? Is there resistance anywhere near here? We got to zoom out a little bit to even see it, which is good. You want to be in that kind of situation. Actually, we have to zoom out really far to see it. So there was resistance way up here, 40 or 50 basis points from now. And it's entirely likely that we'll see that. So it's safe money to go ahead and lock if you're in a purchase situation. You know, you don't have to really roll the dice at all. You can take this great right here at these great levels. And if this thing does turn around and get negative on us, hey, you're locked in. If it does run, which it looks like it's going to, how quickly it will happen is hard to say, then, you know, you're going to be okay. You're going to be able to capture that. If you're refinancing, now is where you actually go ahead and wait for a second. See what happens with this. If this doesn't hold, if these lines don't hold, these 3 lines right here, if they do not hold price action over the course of the next couple of days, if it breaks back down, then you need to lock. Okay, that's the lock signal. If it goes up here, and kind of trickles back down, that's okay. That's what we want to see. We want to see it go up a little bit, trickle back down to these levels as support, and then fire higher. If that happens, then we are off to the races. Sky's the limit. We will probably reach the all-time lows again. So what does that mean? Well, the all-time lows, we're already starting to see it, like 10-year, 15-year loans in the ones fixed. VA and FHA at 2.25. Conventional loans in the mid twos. Some of that stuff is out there in the perfect scenario, but I'm saying mainstream, this is what a lot of people will be able to get kind of situation. And that is really upon us. We are now, that has become a very real possibility. For me, the chart was just telling me that it's light. This is the chart of a light security. What I mean by light is it's like it has helium in it, just wants to go higher. It looked like it wants to go higher. It's acted like it wants to go higher. Even when it got beat down here, when Jay Powell had that really bad day for us, look what happened the next day. I mean, it just was wanted to go higher, even if there were a few, bumps in the road. This trend line now that we've got here is well intact. But as you can see, that trend line can still be intact if this comes back and closes beneath some of these resistance levels, which we've just busted through. That can still be intact. So there's still potentially a little bit of headwind. This wasn't the best candle to see. But what I was going to tell you on Friday, when I didn't get the chance to do a video, if you look at this candle right here from Friday, see how it's a full solid green bar? In the past, if you go back and look, anytime we've had something close to a full solid green bar, the next day has been up, pretty much. And there's very few solid green bars like this one here, and then we're up, and we ratcheted higher. Here's another full green bar, and we kind of went sideways and then ratcheted higher. So, and there's very few examples where we went lower after that kind of bar. It's just a full-on green bar beauty. And that was a beaut. That was a real beaut. So I had a feeling today we'd stay above this 200, and that was the key. So right now is a good time if you're refinancing to go ahead and hold off for a second, potentially just see what happens. Some people have already got locked in to the lowest possible rates. Like if you're a VA and you're locked into 2.25, that's as low as a VA is going to get for a fixed rate without, buying it down. If you are, an FHA, it's kind of the same thing. So it depends per person, of course, always. But I will tell you this, I could be wrong about all this, but I do think we're going to see over the course of the next few months and towards the end of the year, we should see rates improve. Now, for people who are buying homes, that's going to just increase the competition. Speaking of competition, buying homes, here's some interesting information. So, and we know BlackRock, we've been following them. They're buying tons of real estate. They are heavily embedded in this administration. Look at this. Global head of sustainable investing for BlackRock became the director of National Economic Council. The former chief of staff for the CEO, he became the deputy secretary of the Treasury. The former global chief investment strategist, he became the chief economic advisor for the vice president. So BlackRock is very well ingrained in what's going on in the White House right now, and they have their tentacles in there. Why does that matter? Well, they have their finger on the pulse more than you or I do. So we should pay very close attention to what they are doing. Well, what they are doing is buying lots of real estate. So you tell me, like, for sure they have inside information, okay? And there's probably nothing illegal about it. I'm not saying there's anything wrong here, anything's happening that's bad. I'm just telling you, they have insiders in there who know more macro than we do, and they are buying real estate hand over fist. So take that for what it's worth. But expect that, we're going to see some interesting times in real estate, as I believe right now it's a little bit more reasonable out there if you're a buyer. I think we could get back to a complete frenzy state, especially if we see a lockdown again. This is a bigger deal than they're making out of it, by the way. Treasury Department to invoke extraordinary measures as Congress misses debt ceiling deadline. Congress has been so tied up in this infrastructure deal that we've basically blown through the debt ceiling. Do any of us really know what happens? Like, does a building explode somewhere when that happens? No. It gets figured out. We do IOUs. We do what needs to be done. But the fact that the government is so far behind on all of this economic stuff is not good, because it becomes a very good excuse to raise taxes. I noted this here. Oil really, really, really slid today. Let's see if it's still down in near $70. Okay, bounced back a little bit, 71.5. It was down near $70 there for a little while. And gold still right above 1,800. Bitcoin back down to 39,000, was in the 40s there for a little while, back down to 39. Ethereum was actually green all day today until just now. So that's just what's kind of going on there in general. But oil price is sliding. China economy concerns. Well, the China economy still grew, but it didn't grow at a great pace. So that is what I call a very weak sell signal. Okay, when you're expecting a country or a company to grow at a certain clip, and they grow at a lower clip, but they're still growing, I think you gotta kind of take that with a grain of salt, because there is a higher crude output coming, okay, from OPEC, and that was all by design to get prices lowered. I don't think the concerns over China are legit. And so I think this is sort of like a reverse signal. Like, this is a signal where they're saying, hey, be worried about oil. And I'm saying, oh no, this is to me a buy sign for oil. Like, this to me means, like, if you hadn't got into something yet, if you haven't bought, the USO or Exxon or Chevron or however you want to play it, this to me is like a buy sign. Like, okay, I'm buying it now that you're trying to tell me not to, kind of situation. Let's see. This one is very interesting. The idea of a 4-day work week is more popular than ever. Here's why it's unlikely to come to Wall Street anytime soon. Wall Street is not where people go to take it easy, guys. Remember this too, as I mentioned these, I put these guys' faces up here. I'm not talking trash about these guys. Most people go to Wall Street to just get rich and then get out of there. Most people want to go in there and they work their butts off for 4 or 5 years, make 10 or 20 million, and then go retire somewhere. That's like what the majority of people go there for. Now, some people are infinitely greedy and they'll stay there forever and so forth. But most people, it's an in and out kind of situation. That's why there's such a hardcore money grab and people are willing to do crazy things, because it's fast money to a lot of people too. But there is a genius. See, here's the problem. We need more accessibility with businesses. And if you're a business owner, or if you're a service provider like I am, these are the types of things you need to be thinking about right now. People want access to answers 7 days a week. Now, I work in a 7-day-a-week business, so I was talking to clients yesterday. I had multiple consultations yesterday, talked to multiple agents yesterday. We got multiple offers accepted too, by the way. So for me, I love it and I'm cool with it. I make it work. A lot of people have a hard time with it. They struggle with it. What really should happen, if we want to get the economy to be the most efficient that it can be, is that everyone should be open 7 days a week. Every business should be open 7 days a week. And what you implement a 4-day work week, and what you do is you have people overlapping jobs. So, I have a counterpart. Let's say I'm A and that person's B, and we should overlap 1 day a week, the busiest day, whatever that is. If it's Sunday for you because you're in this type of business, or if it's Wednesday because you're in that type of business, you have 1 day that you overlap, and you both work 4 days a week. So that 1 day you have a chance to converge, do the handoff for any urgent matters that need to be dealt with. Each person gets a 4-day work week. And that is the type of thing we need to get to, because we need more accessibility, not less. But we also need people to be able to live a little bit. And most people need, more time off, not less time off. So if you're interested in a 4-day work week, don't get into the real estate or mortgage business. I can tell you that for sure. This one is sort of one of those red flags I just wanted to bring up. Square is to basically buy Australia's Afterpay, $29 billion deal. This is sort of a layaway type company, a buy now, pay later. And it's a huge trend that's taking off. And that's bad, okay? This is essentially like new credit card debt. And that's not good. That's not what we want to see right here. Not what we want to see right here at all. Also, here's another big one. So this is a story, and I'm going to link this today too. This is a story done by NBC News, and it's called The Rise of Built to Rent. You can't see it because my head's in the way. The Rise of Built to Rent Single-Family Suburbs. These are companies that are building these homes just to rent them. That's the only purpose. They build neighborhoods of homes specifically to make them long-term rentals and have long-term income from them. And they provide a bunch of great data in here. And from 2019 to 2020, single-family built for rent construction increased 25% or 27%. There's some other good stats in here. Private equity investing billions in single-family rental market. Okay, and they just provided a bunch of really cool blurbs like this and some great information on it. And they actually are doing a case study of this one particular group, and this one particular group that they're doing this study on is talking about, hey, this is why we built this community. Here's the purpose of it. They're rentals. We're never selling them. and we're going to, rake in the cash. So this kind of thing is also happening a lot. So we talk about inventory, the need for inventory, how crucial that is right now. And when you have some of the construction resources going towards not resale, but rentals, built to rent scenarios, that is just pushing the penny even further off the edge toward home ownership being the right way to go. Because if the new inventory that starts coming on becomes rental inventory, we saw this trend start after the crash, when the high rises, all the high rises that were built, they were overbuilt. They couldn't sell, so they converted them to rentals. And they're like, why didn't we do this in the first place? So much better situation. Now it's sort of a strategy for some of these high rises to do that for 10 years, get past the construction defect window, and then sell them as condos. And so there's some evolution going on in that whole space. All of it, by the way, mega bullish for real estate. Mega bullish. In fact, everything I've told you here is mega bullish for real estate. Even the possibility of a second lockdown, which, by the way, I put a post on Facebook that I was showing you earlier, and I just thought it was funny. People got extremely serious in there, and which is fine. It is what it is. I'm a free speech guy, so you can come say whatever you want in my feed as long as you're not cursing or being mean to someone. And a lot of people really don't think it's possible that another lockdown could come, but I believe that it absolutely is possible, because there are some areas that are affected really badly. And I believe that the powers that be, the billionaires that got extremely rich during the COVID lockdowns, want more. That's just my 2 cents. So we'll see what happens with that. But hey, on the interest rate front, man, the bond chart looks really, really good. The best it's looked in a long, long time. The Fed is in there pushing the buy button. No one is getting in their way right now. That also kind of leads me to believe that stocks are a little frothy, a little bit frothy then. And, up near 35,000 on the Dow, we've been stuck there for a long time. So it's either leg up or leg down. But at some point, we got to break out of that range. And my bet is going to be leg down. Now, what will that do to crypto? What will that do to oil? It's hard to say. Everything could get dragged down if there's another set of lockdowns, especially since most people aren't prepared for it. The crashes that happen and the liquidations that take place that are the worst, that are the most violent, that are the most damaging, are the ones that catch you off guard. 9/11, for example. Those kinds of things are the things that can really, really sting. So I just want everyone to be prepared for that. Take a look at your portfolio, maybe lighten it up a little bit. Not a bad idea right here. And then the big question is, what's going to happen with real estate? Are people going to buy real estate hand over fist the same way that they did the last time? And, that's a big question. Are people going to buy real estate with such fervor as they did when COVID hit and the initial lockdowns came in? If we get into that situation again, will we be back into that kind of scenario? And I think that that'll be the big question to answer. And most likely it will be, in my opinion, because real estate is the one thing that's going to continue to make sense no matter what happens. But we'll have to see what happens next. So hopefully that's helpful for everybody. I've got to get back on the phone. I appreciate you tuning in. And let's keep an eye on those mortgage rates, and let's keep an eye on announcements from the White House about a potential lockdown coming here in the next couple of weeks. Be prepared for that. Get ahead of it. It's okay if you have too much toilet paper, order it now while you can get it from Amazon next day. If nothing happens, then great. But if it does, you'll be prepared for it, and you can thank me later. You can mail me a roll of toilet paper. All right, everybody have a great day. I'll talk to you soon.